presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compact Market Wrap YouTube update for July the 21st, 2025. I'm Mo Ansari, President of Compact Asset Management, and thank you for joining me today. First of all, there's a change in where you can get the YouTube update. Go to compact.com and click on Insights, just to our website, compact.com. Click on Insights and you'll get and subscribe to this channel, and you'll get all the YouTube updates whenever I post one. Looking at the markets last week, S&P relatively quiet, up about 0.5%, up nearly 8% for the year now. Looking at the NASDAQ, it was up 1.51%, and growth, Russell 1000 growth was doing well. So we're seeing the growth market continue to do well, and I'm going to talk about that because earnings are coming out, and they're coming out better than expected. We'll talk about all of that in a second when I take a look at the earnings chart in a minute. Technology, again, the best sector. Utilities, which is also being pushed up by technology, where there's a tremendous power usage in the AI. So they have to have these power plants being built, and the demand for power is going up dramatically. How we are going to power all of this AI is the question, and that's why we're seeing a lot of demand for the utilities. Energy sector down 3.8% as things subside in the Middle East. Looking at the treasuries, we were relatively flat, 4.43%. Last week, 4.44%. But at the higher end of the range, between 4 and 4.5, we're at 4.44, 4.5 today, so that's where we are. But we continue to see high-yield bonds continue to outperform the regular bonds, the treasuries, and that is a good sign. When high yield, which are bonds from relatively lower grade companies, and those are the ones that get into trouble if the economy slows, it shows that the economy is doing well, and that's how high yield bonds continue to lead to the upside, and that is still a positive for the market. Tariffs, when we saw tariffs, the earnings for the year for 2025 were way down. They had come way down, and same thing happened to the quarterly earnings for 2025. But you can see that we saw a sharp jump up, and that's what we're starting to see right here, is a jump up in earnings estimates, and that is a positive sign. If you look at all of 41% of the earnings growth is coming from the Mag 7. And if you look at about 60% of the growth is coming from telecommunication services and technology. So that is what is powering this growth, and that's where all the growth is coming from. And that continues to do well. The earnings continue to do well there. How long it's going to last, we'll have to wait and see. Technically, we're getting to a point where the market is fully priced. Either we're going to get a pullback or the beginning of something that we don't know. The tariffs come into effect on August 1st. How many of them are going to stick? Which ones are going to be extended? Which ones are going to be watered down? We don't know that, but I believe some of them are going to stick, and that could be the next catalyst for the market to take a pause, sort of go sideways to lower, and I'll talk about that, why in the short term. CPI came in last week just about as expectations. We continue to see shelter coming down, and new home sales now, the inventory is 9 months. Usually we get above 6 months. It's tight. Anything above 6 is usually, now we're at 9 months. So that should show prices coming down, especially on new homes. We get some data on existing homes later on this week, but we are seeing real estate soften quite a bit, and that is bringing shelter or rents down, which will continue to put downward pressure on the inflation numbers. Existing home sales come out on Wednesday, new home sales come out on Thursday, and then durable goods. Not a lot of economic data coming out this week. Technically, this was the target right here, 63.50 to 64.50. That's what I was looking at right about here in this window. We're at 6,300, first close above 6,300 today in the market. So we are fully priced, but this is a third wave. Usually we get a full fourth wave pullback and the fifth wave new high. But when you look at the weekly charts, we're at a fifth wave high. But again, that is between 63.50 and 64.50. So we could sort of wiggle around here on the weeklies right around here, make another slight higher or test these highs again, while on the dailies we get a pullback and come back up to 6,400. So I think we're going to bide some time here in these markets, and we're relatively at fully priced. Same thing on the dailies on the NASDAQ. I mean, if you look at the NASDAQ, it's gone from nearly 15,000 or 14,500 to 21,000. It's been a huge run in April. I mean, the S&P is up 26% since the April low. That is an incredible move in the market. So again, on the NASDAQ, a third wave pullback, fifth wave high, but staying within this window of somewhere around 21,000 and 21,500 is what I'm looking at right there. Same weekly fifth wave highs on the weeklies could get a little sideways while the dailies figure themselves out. But again, 21,500 to about 21,000 is what I'm looking at. And that's where we are today, 21,020 plus or minus. This is the picture on the charts on inflation, on the interest rates. We've been stuck here since March, back and forth, back and forth, back and forth. If we break out to the upside, that's inflation. If we break out to the downside, that's recession or slower economic growth. But we're right here and we're getting tighter and tighter. You look at the 50-day moving average, 4.41, 20-day moving average, 4.39, 200-day moving average, 4.36. The range is getting tighter and tighter and tighter. So it's coiling these interest rates, and they're going to go one way or the other. We'll have to wait and see. Gold up big today, up about $50 an ounce. Again, we saw this sort of coming down right here. If we can break out above that, that would be a good sign. Again, I'm looking at somewhere around 3,600 as the fifth wave projection from this high, somewhere around 3,500 for gold, and we are at 3,400 today. Crude oil going nowhere after that big spike on the Iranian strike problem, and since then we're here and not going anywhere big. Bitcoin, we saw this gap up last week, and I mentioned that could be its exhaustion gap, and we are starting to see a pullback. And this is the ETF for Bitcoin. That's IBIT, as it's called. That's the symbol if you want to buy an ETF for Bitcoin. But I think we could come down to the 20-day moving average or the 50-day moving average. A little bit of a pullback on this market also. But again, remember, Bitcoin moves usually twice as fast as the NASDAQ, so keep that in mind. Those are the ways I'm looking at the market. Relatively quiet here, but this is the time for you to evaluate your portfolio. If you felt uncomfortable in April, now is the time to take a look at it. Make sure you have the right allocations. Make sure you have the right amount of risk in your portfolio. If you were uncomfortable in April, now would be the time to lighten up a little bit, change the allocations a little bit. So give us a call. We'll do a free evaluation. Send us an email at invest@compact.com, or just give us a call at 800-388-9700. Again, if you want to subscribe to this channel, just go to compact.com and click on Insights, compact.com, and click on Insights, and you can subscribe to this channel and get all the communications there. Those are my thoughts. Those are my observations. That's the way I'm looking at these markets this week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.